Hey, Roger, this is a good idea. Just having the banks roll in all the closing costs and finance everything so that the borrowers don't have any skin in the game. No, I'm kidding. No, that's a horrible idea. Yes, it does work for some people. It would help some people out. But for the most part, in 2000, 2001, 2002, 2003, 2004, banks were giving out loans called stated income, stated assets. Countrywide was giving mortgages out to people. You could say you worked at McDonald's and you make, well, you did work at McDonald's, but you could say you made $150,000 a year and they would give you a loan. If you put 5% down, they would allow you to borrow $400,000, $500,000, $600,000, and they would give you this thing called an ARM. It's an adjustable rate mortgage. And what happened is they would give you an ARM of, let's say, 3 or 5 years at this rate of 4 or 5%. And at the end of the 3 or 5 years, they have a 3, a 5, a 7, a 10-year ARM, meaning it's fixed for that time. And then after that time, it adjusts. So each one of those loan products adjusts differently. So if you have a 3-1 ARM, then that means it's fixed for 3 years. And every year after that, it adjusts according to market value. And it does have a cap. Many times, if you had the cap, it could be a cap of 2% or 3 or 5. So what happened was they would give loans to people at 4%, and it would be a 3-year ARM. And at the end of the 3 years, the interest rate went from 4% to 7% or 6%. And their payment would go up $1,000 or $2,000 a month. They couldn't afford the home anymore. And in 2008 and 9, you see what happened. There was a flood of foreclosures, and that's because people were not invested into the game. So they would buy the house with very little bit of money down. They would lie on their application. Even though that was mortgage fraud, they were lying about it because the lender's guidelines said you could state what you made. We didn't have to prove it. That no longer applies. We now, as loan officers, have to approve and review your pay stubs, your W-2s, your bank statements. We also order transcripts from the IRS. So if you say you make $82,000 a year and you provide a W-2, we're also going to search that with the IRS and make sure that you filed your taxes accordingly. Whereas in 2004 and before, we didn't do it. It was done on a random basis, okay? So now that you have to verify everything and you have to have skin in the game, that's going to protect the country from having a mortgage collapse. So what we have now is we have an extreme shortage of homes for sale. We have very well qualified buyers who can buy